May I request everyone to kindly turn on the silent mode on the mobile phone so that we can have a smooth proceedings of the evening ahead, please. And also, just as a precursor, we have placed the QR codes of the presentations that are going to be made this evening. I request you all, ladies and gentlemen, to kindly scan them so that you have the presentations on your mobile phones. Thank you. All right, I think we have the house in order. So, namaste, ayubovan, vanakkam, ladies and gentlemen. A very good evening to each one of you and welcome to today's event, The Dialogue. I am Hetal Kotak from NSE International Exchange and I will be your MC for this evening. It is our utmost honor to welcome you to this gathering spearheaded by the High Commission of India, Colombo, in collaboration with NSE International Exchange, International Financial Services Center Authority, CareEdge Global, the Indo Chamber of Commerce and Industry, and TWCorp also. We are delighted to engage in an evening full of new ideas and dialogues and build strong bridges to partner together. It is my honor to welcome on stage His Excellency Mr. Santosh Jha, High Commissioner of India, Sri Lanka, to mark the beginning of the event with his opening remarks. Thank you, sir.
Dr. Pradeep Ramkrishnan, Executive Director, International Financial Services Centers Authority. Mrs. Revati Parag Kasture, CEO of CareEdge Global. Mr. Venkat Ramani Balasubramaniam, CEO, NSE International Exchange. Senior officials from the Government of Sri Lanka, Securities and Exchange Commission, Colombo Stock Exchange, business leaders, friends from Sri Lanka and India, Ayubovan, Namaste, Vanakkam. It is my honor and privilege to welcome all of you to this very important dialogue on credit and capital, building trust through ratings and regulations, a platform dedicated to unlocking the boundless potential of partnership between Sri Lanka, Sri Lankan business, and GIFT City, India, India's rising international financial and technological hub. As Prime Minister Sri Narendra Modi once said, India is not merely a market, it is a partner in your progress, and your is Sri Lanka here, just to clarify. Today, GIFT City embodies that vision, a space not just for transactions, but for transformative cooperation. I'm especially delighted that we are holding this important event at a moment of renewed energy and collaboration between our two countries. It brings me great joy that this gathering, which aims to bring our capital market exchanges closer together, comes on the positive momentum of Prime Minister Sri Narendra Modi's successful visit to Sri Lanka in April this year. What better time than now to build on that and take concrete steps towards integrating our capital markets and creating a seamless financial bridge between our countries. We will begin this journey with a discussion on the opportunities, that are provided by India's Gift City. We will also hear about CareEdge Global, one of India's leading credit rating research and analytics firm. They can be valuable partners for Sri Lankan businesses looking to invest in India or raise capital in Indian markets. The third entity visiting today, the NSE International Exchange in Gift City, is a window for companies, including startups, to raise capital from India and global investors to not just expand their businesses in India, but go global. Friends, a few words about the Gift City. It is not just a cluster of buildings or a commercial zone. It is the embodiment of New India, agile, ambitious, and globally connected. From international banking and fintech to sustainable finance and global IT services, Gift City offers a seamless, future-ready ecosystem for investors and enterprises alike. It is India's first operational smart city and international financial services center, offering world-class infrastructure, tax incentives, and regulatory clarity, ease of doing business on par with global hubs, a gateway to global capital markets. Once again, let me quote Prime Minister Modi, his call to India for reform, perform, transform. Gift City is not just a reform, it is a transformation of how finance, innovation, and enterprise can thrive together. We welcome Sri Lanka, our closest maritime neighbor, to progress with us on this journey. Our relationship is not just based on geography. It is built on shared civilizational heritage and a shared aspiration for progress and stability. Today, our economic destinies are more interlinked than ever before. This is a time of renewed energy, as I said earlier. Sri Lankan businesses, with their entrepreneurial spirit, educated workforce, and global outlook, are perfectly positioned to leverage Gift City, not just as a financial destination, but as a launch pad into global markets. Together, we can build a corridor of trade, trust, and innovation. For Sri Lankan investors and enterprises, Gift City offers access to financial products with Indian cost efficiency, a platform to co-develop fintech solutions, a secure, regulated environment to raise capital, invest, and expand, opportunities to set up funds, banking units, data centers, BPOs, and much more. Now, Sri Lankan companies choosing to come into India or expand regionally or globally can raise debt and equity on these exchanges. It is an additional source of capital for Sri Lankan companies who wish to invest internationally. This is also an opportunity for Sri Lankan corporates, including banks, to obtain a secondary listing of bonds and equity, where Sri Lanka's Security Exchange Commission and Colombo Stock Exchange work in close cooperation to give support for such initiatives. And beyond investment returns, there is the strategic return of being early partners in of the world's most promising economic zones. Of course, securing a credit rating that supports current issuances is important for Sri Lanka, and the corporates that seek a listing With the steady improvement in Sri Lanka's credit rating, time is opportune for corporates to explore opportunities to raise capital on India's international exchanges. I'm happy to note that the regulatory agencies, such as the Central Bank of Sri Lanka and the Ministry of Finance, are also present in these discussions. This will provide guidance in this impactful opportunity that beckons us. I also look forward to seeing more Indian businesses investing in the Colombo Stock Exchange in the near future. It would not only strengthen the economic ties between India and Sri Lanka, but also open up new avenues for regional growth and cooperation. With Sri Lanka's economy recovering and gaining momentum, there is great potential for attracting Indian investors to benefit from early opportunities. Increased Indian participation would also bring in greater market confidence and stability, fostering a more vibrant and interconnected ecosystem. Friends, the event today is a further confirmation of India's unwavering commitment to Sri Lanka. It is also a vote of confidence and support for Sri Lanka's ongoing economic recovery. It is a reminder that India remains a dependable and reliable partner in our shared quest for progress and prosperity. Let this dialogue be more than a meeting of delegates. Let it be a meeting of minds, of ambitions, and of future. I invite every one of you to explore, engage, and envision what this partnership can become. The time is now. The opportunity is here. Thank you.
Thank you very much, sir. Your remarks are a testament to the spirit of regional cooperation and mutual respect that defines our two nations. Thank you once again. May I now request and welcome on stage Mr. Pradeep Ramakrishnan, Executive Director, International Financial Services Center Authority, IFSCA, for his remarks and presentation, please.
Good evening. Ayubovan, அனைவருக்கும் இனிய மாலை வணக்கம். It's an honor to be here. I would like to first thank the High Commissioner for making my task easy, for giving an excellent primer about the gift city. So I have a short time, as I was warned by Hetal not to delve too much into what exactly it is, because we can have a lot of deep dive discussions on the sidelines. So I'll just give you a primer as to what exactly Gift City is and what it offers to everyone, including the globe. Before that, I would like to sort of go back in history, more so because India as a nation and Lanka as a nation got independence around the same time. We got independence in 1947 and Lanka in 1948. So we have sort of been around independent for almost 7 decades, right? So from 1947 till 1991, India followed a mixed economy type of, the way of doing business. So essentially it meant that while the government would be in business in a lot of sectors, there will also be private private also would be allowed in doing business, but it would be licensed. So it used to be called as the license Raj. Now, while India has never been a defaulter, while we did borrow a lot of foreign capital over a period of time, there was a point in time in the late 80s, early 90s, where we were actually asked by the IMF to ship our gold for getting more loan. So that was the time when our lawmakers said and policymakers decided that, okay, probably the time is ripe, probably the time has come to follow a different way of doing business, and that is what we call as the LPG, liberalization, privatization and globalization. Now, in this, a lot of delicensing was done. Largely, all sectors except defense and railways were privatized. A lot of foreign capital came in, and India as a nation started, reaping the benefits of this right from the mid-90s onwards. Now, around 2007, while probably liberalization was almost 1.5 decades old, so there was a committee which was started by convened by the government under the chairmanship of a very foremost thinker, Mr. Percy Mistry, to develop Mumbai as an international finance center. So Mumbai is India's financial capital, right? And the committee submitted its report, and like it happens, it took some time for someone to act upon it. The present Prime Minister of our nation, who was the Chief Minister of Gujarat at that point in time, he seized the opportunity and he said that, okay, let me bite the bullet first. And that is how he started this whole concept of GIFT. Now, what is GIFT? Gujarat International Finance Tech City. That is India's first international finance service center, and that is how it was born in 2012 with the laying of a foundation stone. Now, it took some time for it to develop because a lot of things were different, and we had to bring in rules, regulations, and at one point in time, after almost 8 years of laying down the foundation stone, an integrated regulator itself for this place. Now, what is this gift city, right? Now, if you look at this place, in this map, there is a small place called the International Financial Service Center. It's around 300 odd acres. And the entire area is around 900 acres, but 600 of those acres is something what you call as the domestic tariff area. But what we are talking about today as the gift city is this 300 acres. So essentially it is India's first exclusive financial services special economic zone, right? And so generally special economic zones are for manufacturing. This is the first one which is exclusively for financial services. It's been developed as a greenfield smart city. So I would actually welcome you all to visit to a sort of, probably fathom as to what I'm trying to tell you, because it's developed, we have got a centralized cooling plant for the entire city. We have a smart waste disposal system and whatnot. So at present, almost 13 million square feet of land is under development. Already we have got some 12-13 buildings which are already there. And we are also trying to bring a lot of things, like we are having international universities and other things, which I'll tell you as we go along. Now, whenever there is an international finance center, if I'm going to ask you what is an international finance center, what comes to your mind? So a lot of people are going to talk about a Singapore or a London and whatnot. And why does this come to your mind? The reason is because there are certain things which these international finance centers offer, which your domestic finance center does not offer. Now, one of the main things is the fact that there is a tax exemption, which I'll tell you about. But how does this work? How is it different from India, right? And how is it different from the rest of the world? First of all, the rules and regulations that are applicable to India as a jurisdiction don't apply here. So you have the Reserve Bank of India, you have the Securities and Exchange Board of India, you have the Insurance Regulatory Authority. Now, they have laid down rules and regulations for the India domestic region, whereas these regulations don't apply here. So for the purpose of the gift of the IFSC, a person will be treated as an offshore non-resident, and business is not done in the Indian rupee at all. It is done only in international currency. 15 currencies are permitted at present. There is a tax holiday which I'll come to you where it is. And we have a unified regulator called the IFSCA. Now, earlier, between 2012 and probably 2019-20, we did have the Securities and Exchange Board of India, the RBI, others, etc., having, actually having jurisdiction over the GIFT City. But then we found that there are too many people thinking and too many regulators going to them for each approval, etc., was taking time. The government decided that, okay, there is a time, the time has come for us to have an integrated regulator. That is how the IFSCA was actually born. So, and we are actually a dedicated and unified regulator. We are exclusively for the purpose of, bringing in rules and regulations for this GIFT City. There are no capital controls, and the rules and regulations are completely different from what you will find in the domestic India jurisdiction. Now, over a period of time, with these rules and regulations, almost 30 rules and regulations have been brought in by the IFSCA. We have a banking regulation, we have a listing regulation, capital market intermediaries regulation, like that there are various regulations. Now, when you talk of an international finance center, it has to encompass a wide variety of intermediaries and players, right? So accordingly, we have different players here, as you can see. Now, within the period of the last 4-5 years, since IFSCA began its operations and brought in rules and regulations and started registering various intermediaries, we have got almost 30 banks, and many of them are, half of them are foreign, half of them are Indian. We have got global representative offices, and we have got 2 stock exchanges that are dedicatedly working in the GIFT City, and they do business for almost 21 hours out of 24 hours a day. We have 2 dedicated clearing corporations, 1 depository. We even have a bullion exchange which commenced its operations in July 22. It does, largely, even spot business is also done there. So we have, vault managers actually storing bullion and gold in this place. We have investment bankers, we have rating agencies. One of us is there with us today. Ms. Revati will be giving her version of things. And one of our successful verticals has been the fund management industry. If you see on the last part of the slide. So we have got almost 161 fund management entities and almost 230 alternate investment funds. Of course, the biggest reason for so many number of people coming in is India's investment climate. So we have got the highest number of IPOs last year in the world, and with almost 300 odd IPOs, it raising almost $19 billion. So it's mind-boggling, the number. And there are, in fact, the domestic regulator is just keeping up with time clearing offer documents. There is so much interest in India's domestic market, and there is a lot of value. The domestic stock market offers value which a few international stock exchanges in the world actually offer, which is why we have a lot of money that is funneled in through these funds. Interestingly, a lot of these funds, most of these funds in fact, invest in startups and venture capital and private venture entities, which ultimately sort of unlock the value of the investment that has happened. So we also have a reinsurance business that is going on quite well, and we also have niche institutions. I'll give you an example. So there are 2 things which you see in the bottom of the slide called aircraft leasing and ship leasing, and what are they doing here in the international financial service centers? See, India's aviation hub, probably when airline business around the world is actually is not making so much progress. Interestingly, India's aviation business is actually soaring. And the fact is that because we have got a lot of airports, we have got newer airlines, and our airline companies have placed the largest orders in the world when it comes to leasing or buying planes. And most of this are actually done from Dublin. Why should you go all the way to Dublin to lease a plane? Why can't you do it here when it's your own business? So that was the idea with which this actually was started. So if you look at the IFSC, and from this, if you see there are 3 major objectives with which it has been started. The first is, over a period of time, also due to the license Raj and other things, and also the fact that we are the most populous country in the world, and 1 in every 6 persons on the earth is an Indian. So over a period of time, they have moved out and they have started businesses around the world. So we would want them to come here and launch further businesses. That is one thing. And secondly, we also want to, so we call that as onshoring the offshore. That is a tagline which we call it. The second one is we want to be a hub for global capital flows. Now, when I say global capital flows, it also includes something very interesting as sustainable finance. right? Because sustainable finance is the buzzword, and India is a very serious player as far as sustainable finance is concerned, irrespective of other countries, many other countries who have like gone back and forth on promises. We are not only wanting to raise sustainable finance to achieve our net zero goals, which we have set by 2070, we also have midway goals, like for example, we have one in 2030. And I'm happy to tell you that we have probably one of the few nations which has already achieved its 2030 goals, so much so that we have pushed our goals even further so that we can do it. So we also need a lot of money. So some of the estimates say that India needs almost 10 to 20 trillion dollars to achieve its net zero goals. So which means that a lot of such money has to also come from Indian entrepreneurs and entrepreneurs from or funding institutions from around the world. So the last one, objective why we have been established, as I told you, capital is one, onshoring the offshore is one. The last one is being a hub for innovation. Okay, so now in the domestic ecosystem, there are certain experiments that we can't do because of the fact that there's this capital account convertibility controls and also a presence of a huge retail population. So, but what has this small IFSC done to us is that it has given us the scope to experiment. Okay, it also has given us ideas which we could do over a period of time, which can actually be taken care of by the domestic jurisdiction. So we have done certain experiments. We have brought in certain rules and regulations which have been tested in this jurisdiction, which have gone back to the domestic regulators, and they have sort of taken that into account and tried to experiment there. Now, as I told you, an IFSC is incomplete without talent, right? We need to also have talent. We need to have the people and the businesses also for doing it. So what we have tried to do is that try to build the talent. We have global in-house centers. We also have foreign universities there. Already there are 4 foreign universities which have set their campuses. Now I invite Sri Lankan students, if you are interested, please check the brochures. You can come and study of these the courses in these international universities at half the price. Because one of the concerns for all people who are going abroad to study is the price, right? Is the cost of the courses. So what we have done is that we have brought in a lot of these foreign universities, and there are many also in the anvil who also want to come and join this place, and you can actually do it. There is no interference from the University Grants Commission of the local domestic jurisdiction with reference to curriculum or anything. You are free to repatriate your profits also back. So that is something which I also leave it with you. Now, the last piece in this whole emerging business is your accounting, taxation, and financial services providers. So that is also something which we have sort of brought. So in case there are chartered accountant firms here in Lanka who would want to do international business, so you know where to look at, right? So that is also a place where you can sort of look at. So these are the 30 regulations which I have talked about for a period of time. This also keeps increasing. There are one of the things which we have kept in mind. So for example, if I'm going to ask you, what are you looking for in a regulation as a person who is going to raise money, right? A, you will say cost of capital. B, cost of compliance. These are 2 important things that you are looking at, right? As an investor, what are you looking at? I am looking at depth in disclosures. I'm looking at transparency. I'm looking at stability, right? So these are the things which are actually sort of embedded in these regulations, and they are subsumed in every single thing that we do. Now, today afternoon there was a very interesting podcast which I was part of, and someone asked me a question which I have never been asked earlier. So he was asking this question that when you are making rules and regulations, is there a regulatory capture by global consultants? Okay, so that was a very interesting question. So I went back and I thought, okay, what do we do different, right? So what we do is that we are possibly one of the few regulators in the world who has a regulation to make regulations. How to make your regulations there is also a regulation for that. And why do we have that, and what is so different about it? Now, in this regulation to make regulations, it lays down the fact that when a regulator makes a regulation, there needs to be transparency, there needs to be public consultation. So what we do is that we put out a paper for public consultation, we receive comments, and we prepare a draft of the regulation, we put it out for consultation once again. And once we receive the comments, so essentially if you see, 2-3 things are there. One thing is, of course, there is transparency and all that. Secondly, the regulation or the law that we are trying to do is actually as much embellished by the views of the participants who are there and also from global players. Very interestingly, we have just put out a consultation paper on tokenization, which is also the rage around the world. And I'll tell you that we received almost 600 comments from around the world. Right, so it takes time for us to sort of subsume these comments and then put out a paper. So this is how we try to do that. So that whole regulatory capture thing actually doesn't exist. The concerns are actually taken care of. So this has led to almost 850 plus entities which are here. And we have Bala here, who is also going to talk about NSE IX, the success story. So we have a monthly turnover of almost 101 billion US dollars, and banking size assets also has gone up. Now, I was telling you that I will talk to you a minute about sustainable finance. I have 5-10 minutes more, Hetal? Yeah, okay, thanks. Now, we as a nation have sustainable finance goals, and we are quite serious about it. So what has the IFSC done towards this? The first thing is, now I have spent 22 years of my life with SEBI, Securities and Exchange Board of India. And one of the things I'm still proud to be part of is designing a taxonomy, a green taxonomy for listed entities. And it was largely based on the ICMA taxonomy, but it was sort of contoured to suit the Indian businesses. But for some strange reason, except for a few municipalities, no listed company raised green bonds. And I used to be perplexed as to why this happened. So I came to IFSCA after taking a voluntary retirement from SEBI. And when we discussed with international participants, we found that green investors invest differently. Sustainable finance investors invest differently. Now, how is it? Now, suppose I am from Japan. I am familiar with a taxonomy called the ASEAN taxonomy. So I know how it works. I know the disclosures. I know the pre-issue, post-issue disclosures and other requirements. So if you are raising finance from me, then I would prefer that taxonomy to be used. Similarly, if you take ESMA, like an European, they are comfortable with an ESMA taxonomy. So what we did was, instead of reinventing the wheel and bringing a new taxonomy for this particular jurisdiction, we said that we'll accept all the international taxonomies, right? We have ICMA, we have ASEAN, ESMA, and whatnot, and including the Indian green taxonomy. You will be very surprised to note that this has actually led to the green bond market in IFSC actually shooting up. We have had almost 100 odd issues of bonds and 150 odd issues of bonds, out of which 50 plus issues of bonds have been green. And they are into sustainable bonds, sustainable linked bonds, green and social bonds. And we even had large institutions like ADB and IFC also raising money out of this jurisdiction. So this is also a learning. Like say, we also always learn and we'll unlearn and we relearn again. So this is something which has happened to us also. Secondly, when it comes to ESG funds, we have brought in certain rules and regulations for ESG funds. And we have also said that the first 10 funds to register with us will receive a fee exemption. The fee is quite substantial, almost $23,000. So almost 4 funds have already used it. And in case there is any of you here or any of your friends here who want to start an ESG fund in the GIFT IFSC, you know that's a huge windfall in the form of a tax and a fee exemption waiting for you. Now, the last thing is that as far as sustainable finance is concerned, possibly the only regulator in the world to have brought this rule, we have said that banks who are there in the IFSC, I showed you that almost 30 banks which are there, out of their lending, 5% of their lending has to mandatorily be towards sustainable finance. Okay, this is a very unique rule which we have brought as a regulator. This has led to almost 4 billion worth of money being lent towards sustainable finance, and this is just growing. And that is also something which we have done from this place. So this has led to a lot of who's who of the world coming and setting up places here. This is actually a very small microcosm of the number of entities there, because now at one point in time we were having the slide was larger, the number of entities was less, and we could accommodate some of them, but now the entities have grown, but there are just the who's who of the world which are actually here. So what I'll do is that I'll stop here, and we anyway have a question and answer session, and there are also other speakers after me who also have to speak. So then we will meet once again. Thank you so much for a patient listening. Have a lovely evening.
Thank you. you so much, sir, for vibrantly setting the tone for the evening and giving insights about access to global capital at competitive costs, tax incentives, and a regulatory environment aligned with international standards at GIFT City. May I now welcome on stage. Yeah. We are honored. Ladies and gentlemen, may we welcome Deputy Minister of Finance, Dr. Harshana Surya Perumatma, with a round of applause, please. Thank you, sir. May I now welcome on stage Ms. Revati Kasture, CEO, CareEdge Global, for her remarks and presentation.
Good evening, ladies and gentlemen. The Deputy Minister of Finance, Sri Lanka, the Ambassador of India to Sri Lanka, and dignitaries, corporate leaders. I'm really honored to come and present before you today the journey that we have started in CareEdge Global IFSCA Limited. We'll also present a bit of a credit view on Sri Lanka too at the end of this presentation. A little bit on CareEdge ratings before we get into the conversation of today, which is ratings and regulations, trust, transparency. So CareEdge Group is India's second largest credit rating agency, and we have over 3 decades of experience in credit rating. We have rated about 2.5 trillion or more worth of debt in our journey, and we are a professionally managed company listed on the Indian stock exchanges. We are the first global rating agency from India to do sovereign ratings on global scale ratings from our establishment in GIFT City under the CareEdge Global IFSCA Limited banner. In October 2024, we launched our operations and we have rated 39 countries and issuances worth $3 billion till date. I'll take you through the country ratings a bit later. Why did we exactly get into this domain, and what prompted us to get into this domain of global scale ratings or international or sovereign ratings is essentially the fact that emerging economies GDP is going to be about 45% of the global GDP by 2027. Emerging economies governmental debt is going to be over 34% of the governmental debt by 2027. What am I saying here? I'm saying emerging economies are becoming bigger, larger, and the global order is changing. And if that is happening, then there is a necessity for credit assessments on the sovereign as well as the corporate scale to be done by an agency who understands emerging economy nuances and who can be an agency from the global south, which is why we started this initiative of CareEdge Global IFSCA Limited. These are some pictures of the launch event. We had dignitaries from India attend the event, as well as regulators attend the event. These are the countries that we have rated, 39 countries. How did we select these 39 countries? They represent about 85 to 90% of the global GDP. They are spread across all continents, APAC, Europe, Americas, Africa. There are 24 emerging markets and there are 15 developed markets. So we selected a spread of both kinds of economies, and they are all across the rating scale from AAA to D. So these are the ratings. I'll give you a moment to look at the country of your choice. We've still not rated Sri Lanka here. We've assigned ratings, as I said, to $3 billion worth of issuances. Some of them are listed on the GIFT exchanges. These are some of the names that we have rated in our 8 months of existence on the corporate side. One thing which is very important to understand is that why do we need to even do country ratings if we are doing only company ratings? Is because when I have to do a company within a country, then I need to have a benchmark country ceiling for me to rate a company within a country. And as per rating methodology, a company within a country can, in theory, go up to 3 notches above the country rating or the country ceiling. So anybody who's rated in a country which is rated triple B can potentially go to single A. That's the ceiling for a company within a country as per the rating methodology, which is why I need to understand what is the benchmark for the country rating that I'm looking at before I get into the company rating. And that's why this entire initiative of getting or spending so much time and energy on building up a transparent, objective rating framework for rating countries. So how is the CareEdge framework unique if we compare to the frameworks which are today available and have been there in existence for more than 100 years? We found when we studied these methodologies that the subjectivity in these methodologies is very high, up to 45% of the methodology is based on subjective parameters. So when we devised a methodology and we put out this on public domain, about 80% of the methodology is based on objective parameters, only 20% is based on subjective parameters. That gets more transparency, more objectivity to the entire process. We also understood that the benchmarks used for developing economies are different from the benchmarks used for emerging economies. And we thought if the rating scale is the same, why are the benchmarks different? Which is why in our methodology, we apply all the benchmarks consistently, whether it is for a developed economy or an emerging economy. There are 5 pillars on which sovereign ratings are done. This is highly technical and I'll not spend too much time on it, but just to give you a glimpse of why why our methodology is different. The 5 pillars are economic structure, fiscal strength, external position and linkages, monetary and financial stability, and institutions and quality of governance. These are the 5 pillars that we have also adopted. But in each of these pillars, we have made tweaks to the parameters that have been used as a part of that pillar. So if I, let's say, take the first, economic structure and resilience. The parameters that are used today by global rating agencies are only 2, GDP per capita, growth in GDP per capita. There is no relevance to size. A lot of people out here are bankers, chief risk officers in banks, or have been in the lending part of the business, or even the investment community. All of you understand that size is important. Size gives flexibility, size gives heft in the ecosystem. And that's why we decided to also include size in the economic structure and resilience, because it gives a balance. We are only looking at growth rates, but it's also important to understand the growth rate is coming from what size. And that's why we included nominal GDP along with GDP per capita and growth in GDP per capita. We also saw a very high correlation between gross fixed capital formation or the investment that a country makes in infrastructure with the future GDP growth of the country. And we said this has to come in as a primary factor or a primary parameter in our methodology, because this gives a sense of where the future trajectory of this country will lie. It doesn't appear as a primary factor in the methodology of the existing rating agencies. Pradeep ji spoke about sustainable bonds and what IFSCA is doing to encourage sustainable finance. All countries have to, and he also mentioned about the trillions of dollars that India would be requiring to meet its sustainability goals. Of course, it is an expensive proposition, and therefore it has to get into the assessment of a country's credit risk profile, because that is the amount that the country would be required to spend to achieve those goals. And that's why this particular sustainable factors do not appear in any of the existing rating methodologies. We have included renewable energy as a percentage of total energy in the energy mix of a country, and the CO2 emissions as a part of our assessments. So these are some of the few things which I kind of want to highlight. I would not go into all the parameters that are listed on this slide, but definitely would love to engage on with anybody who requires more clarifications. When we started this exercise, we said, while, we can definitely understand, we can take data, we can look at governmental data, we can talk to a lot of people, and we did speak to all the multilaterals when we devised the methodology. It was also important to select and choose the people who will actually be forming part of the rating committee to give out these ratings, because at present, we would require the experience and expertise of people who have done it before. And that's why we formed an external rating committee to assign the ratings. The gentlemen on the screen are a part of our external rating committee. They come with significant amount of experience either in ratings or in economic assessments, and come from different parts of the world, right from US, Australia, India, Africa, UK, Singapore. So what it helps us is that we get perspectives which are local in nature in those geographies when we are doing the credit assessments of countries belonging to these different domains. We also have advisors to work with us on framing or seeing how the methodology can be top-notch and current. So Mr. Mark Adelson, who is a former Chief Credit Officer of S&P and a former Credit Officer of Moody's, has been a career rater. And he was instrumental in changing the methodologies of S&P post the global financial crisis, and it is he who actually we run through our methodologies to get his inputs to improvise on them. Mr. Agarwal also has been the Chief Risk Officer of a large rating agency in India and has been on sovereign rating committees for his last employment. So these are the people that we actually have on the rating committee to give us expert advice and actually assign the ratings. What has happened is that, in the past 8 months, we've seen convergence of ratings of international rating agencies with the ratings designed by CareEdge Global. And this is a really busy slide. I would like you to look at the top colorful table, which is there, where you see a comparison of CareEdge Global's ratings with S&P, Moody's, and Fitch at the time when they were assigned in October 2024. When we compare to S&P, out of 39 rating, 18 country ratings were the same, 8 where we were higher, and 12 where S&P was higher, and similarly with Moody's and Fitch. What we've seen in the last 8 months is that there is a convergence of ratings of these global rating agencies with the ratings assigned by CareEdge Global. So let's see, for example, I take Brazil. Brazil was rated CareEdge BB+, which is a higher rating than the existing ratings, and Moody's has now upgraded it from BB to BB+. If you look at, let's say, Portugal was rated A+, 2 notches higher than the existing S&P rating of A-. S&P has now upgraded it to single A with a positive outlook. Of course, China, we had rated 1 notch lower at single A than the existing rating, and Fitch has downgraded the rating from A+ to single A. So we see convergence on both sides, the higher and the lower side, as far as these sovereign ratings go. A little bit on our understanding of Sri Lanka. We've not engaged with a lot of you to get to this understanding. It's based on public data and availability of governmental data. So I'm sure a lot of you over here probably have more information on this, and we'd be happy to connect on that. But the way we see it is that Sri Lanka's economic profile is turning towards stability. So we've just bifurcated into 3 portions. One is, the reasons for the economic crisis, the recovery supported by reforms, and what is critical now is sustenance of those reforms. So the reasons, essentially, all of you probably know better than me, is the twin deficits, the high capex external debt, which led to a default of the country in 2022. What has happened post that is that the fiscal situation has improved after the distressed debt exchange. The inflation has steadily moderated. There's a consistent surplus in the current account balance in the last 2 years, and the political transition and policy commitment is visible. What is required is sustenance of that, improvement in the revenues for sure, trajectory of fiscal and external balances, monetary policy measures, and the monitorable, of course, remains the external, which is the trade impact or global trade impact. which the country might have to face. So if you look at this slide, which is again, I said I divided into the crisis period, the pre-crisis period, the crisis period, the recovery period, and from 2025, we expect the economy to grow sustainably at about 3 to 4%. 5% is what it grew in the last year. It probably will grow a little lesser than 5%. We expect the future path of recovery to be contingent, of course, on sustaining the reform orientation, as structural vulnerability still persists in the economy. What has really led to this economic recovery is essentially the services sector. More close to 50% of the GDP contributed by the services sectors. If you look at the economic recovery, then both the services, PMI for services and PMI for manufacturing have been above board. The PMI for manufacturing has dipped in April 25, but that's more of a seasonal dip, nothing to be read, not too much to be read into it. But if you look at the tourism sector, then that has really grown from strength to strength on a quarter-to-quarter basis. And it's still not reaching the previous highs. So it's still having potential to reach the highs that it had pre-crisis. Sri Lanka's Human Development Index is stronger than its peers, and we think that that's a very, very vital component for its services sector to reach historic highs. So we would bank on the services sector remaining resilient. On the fiscal side, there has been a reduction in gap between the revenue and the expenditure as a percentage of GDP, and tax collections have gone up to 12.5% of GDP. However, it's important that the tax collections remain high and close to 15% of GDP in the coming years for the economic recovery to sustain. The primary balance is a surplus. This is the balance before the interest, and we expect it to continue to be in a surplus. And the government debt is expected to be on a reducing scale for sure. As a result, the interest burden is something that probably will reduce as we go ahead, given that the revenue would increase and the debt affordability, therefore, would be better. So the economy is today well positioned to crystallize this recovery. If you look at competing, or similar rated peers before the crisis, then we have these countries. Where Sri Lanka stands today is that, on the x-axis you have GDP per capita, and on the y-axis you have GDP growth for the next 5 years. And the size of the bubble indicates the size of the economy. That's how this chart is read. So if you look at Sri Lanka, it is in a good quadrant in terms of the GDP per capita and the GDP growth for the next 5 years. However, it has to improve tax efficiency, it has to address distributional inequalities, and that would be enabling it to strengthen the credit profile over a period of time. When we looked at economies which have been in crisis, they have been a very extended period of volatility in inflation and volatility in the exchange rate. That is something I think Sri Lanka has been now able to tame. So we have got a lower volatility in the exchange rate and a little stable exchange rate now, and the inflation has been tamed. Of course, the prices did rise significantly in the past 2 years. So as far as external risks are concerned, I'm going through all the pillars which I explained before. As per our projections, there would be a current account which would have been in the negative domain. However, the forex reserves and the import cover is expected to be at earlier levels. So as a summary, from whatever I could present today, CareEdge Global is a global sovereign rating agency which understands emerging market nuances, and since our launch we have seen convergence of ratings of international rating agencies with our ratings. Secondly, we feel Sri Lanka has definitely weathered the storm, but for the GDP growth to hold up, there has to be improvement in revenue base, the quality of expenditure, and the monitorable definitely remains the global trade impact that can have on this country. Thank you so much for a patient hearing, and enjoy the evening.
Thank you so much, ma'am, for a crisp and clear idea on the global ratings perspective. May I now please welcome on stage Mr. V. Balasubramaniam, MD and CEO, NSE International Exchange, IFSCA, for his remarks and presentation.
Good evening to all of you. First of all, let me thank Dr. Archana Soyuprama, Deputy Minister of Finance for Sri Lanka, and our Indian High Commissioner for giving us this opportunity to be here in Colombo today. In fact, I come to Sri Lanka almost after 13 years, and I can see quite a lot of transformation in this part of the world, and it's a very pleasant surprise for me. My previous speakers actually covered quite a lot in terms of what the GIFT IFSC, or the new financial center which is emerging in India, is actually capable of, and what it can do for entities, both for Indian entities as well as entities around the world. And I think Revati presented the perspective on what the rating agencies can do and how global ratings can start from global south, because so far only the Western powers used to rate others. So effectively, it's a new opportunity and a new reset, which is again possible. I will probably, before I start, what I will just want to give a little bit of a background about the National Stock Exchange. National Stock Exchange, since Pradeep mentioned about the financial liberalization which happened in 1991, actually one of the first liberalized entities or what transformed India was by creation of the National Stock Exchange of India. At that point of time, we used to have 25 or 26 regional stock exchanges. And NSE became one of the transformative ideas where we created a single unified market where actually everybody could trade. And secondly, we actually made it a technology-enabled exchange. Today, as we speak, we are probably the world's largest exchange, one in number of transactions we handle every day. Second, we are the world's largest exchange in number of contracts which we trade on the derivatives. Third, we are the third largest exchange in terms of the number of equity shares which are actually traded in a single day. So this is just to give you a quick testimony on what quickly we have kind of transformed. And I think Pradeep also fleetingly mentioned that last year, NSE actually overtook NASDAQ to become the largest IPO fundraising market in the whole world. And I think even in this current year, the trend is phenomenal. We are already seeing a lot of listings happening in India. I used to be part of the team which set up the NSE way back in 1993, and after almost now 32 years, I can look at it with a lot of pride. But in the same vein, I think what now we have created as a baby of NSE, which is the NSE International Exchange, as also a kind of a transformative idea. So far, India was looking at only reforming from inside, and now actually we are now trying to embrace with the rest of the world. India has become pretty confident, and now we think we can be at par with any global exchange. That is why now through the GIFT City as an international financial center, we are looking at expanding NSE's global footprints to not only look at India, but the whole world as a market, and that's how the NSE International Exchange has been born. I think Pradeep did mention about this, but primarily this is actually something which has come as a reform of our government, where actually this Maiden International Financial Center, which we have created here, was something which I think more than a century back, India used to have a very vibrant stock exchange. In fact, India has the oldest stock exchange in Asia. And in some sense, India has always been a market where a lot of entrepreneurs, a lot of trading activity has always happened. And what Prime Minister has actually done is he wants to galvanize it into becoming an international force. And already one big reform happened, which is basically creation of the IFSCA authority. So earlier we had multitude of regulators with us, Reserve Bank of India, the Securities Exchange Board of India, IRDA, PFRDA, and many financial regulators. What we have done here is we have unified all of them and created a single regulator with a single window clearance for everyone. So a lot of people just pay lip service to ease of business and single window, but this is a proof and testimony that IFSCA authority has already on the ground. It has established all this, and there is a single window clearance which they provide, and they are regulating so many businesses across banking, funds, capital markets, financial services, and they are even expanding into non-traditional areas like universities. They're expanding into aviation financing and so on and so forth. So in some sense, there are more, we expect more things to start coming into the GIFT City. I already gave you a quick glimpse in terms of what the NSE group is and what it has achieved. Just to give you a little bit of sense, we have actually a reach which actually looks at almost 210 million accounts which actually trade in India. So that is the depth of our market. In fact, if you look at it, probably we are the one market where the number of retail investors or common people in India who come directly and participate. So this is virtually a democratization of market. Anyone in India could simply use a hand phone and open a broking account and straight away start trading on the exchange because everything is digital. Banking, broking, settlement, opening a depository, everything is just with few clicks. So effectively, that is the dividend which we are seeing. And I think we have just reached the tip. We feel that in the next 10, 15 years, probably our target is to take this number from 21 crore to probably 50 crore. That's the kind of a target. Also, the Indian regulators, even SEBI is as old as 1992. So this also was born as an institution after the liberalization happened. And Pradeep comes from that institution, that is the alma mater. So that trust and transparency and creating a level playing field for everyone actually has created a lot of protection for investors. And that is actually a rock and bed for any market. So today we are a neutral venue. We don't have a single identifiable promoter. Everybody here is a professional. So effectively what we have created is a very, very transparent mechanism in which people can come. And today, because of the kind of digital systems and the kind of digital capabilities which exchanges like us, or as we call ourselves, market infrastructure institutions we have, today we are able to even do a lot of tax collection for the government. Okay, so that is something which always emerging economies face a problem, where there are a lot of tax leakages, a lot of people don't come in the tax net, which also affects the overall macro stability and macro ratings and so on and so forth. We actually as an institution, because of our reach to 20 odd crores, anyone who touches the capital market, we are able to online calculate the tax liabilities, and the income tax department is able to collect, and we actually collect it every month and deposit it. So effectively that's what we achieved. Now let me come to the story on the NSE International Exchange. I think we are, at this point of time, we are just a nascent startup. That is the way we look at it. But having said that, we now have a track record of close to about 5 years, out of which the big moment actually started from 2023, which is just almost 22 months. And what we did is, we actually got one of our big benchmark contracts, which used to trade offshore in Singapore, to come back to India. And that is something which has given us a big leg up. Secondly, what we have also done as an exchange is, we have gone beyond Indian shores and also registered with international regulators. Today, US, which is the largest global market for financials, we have actually gone consciously and registered ourselves with SEC, the Securities Exchange Commission in the US, also with the CFTC, which is the Commodities Futures Trading Commission. We have got the exemptions from them, which actually enables US investors to come on trade on us. Secondly, what we are doing out here is we are also helping Indian corporates to raise money. So far, we've been talking about sustainable finance and debt financing. In the last few years, the IFSCA exchanges have enabled a lot of corporates from India and even some supranationals to actually look at masala bonds and even foreign currency bonds to be raised from our market. Going forward, we have even more exciting story because now the Government of India and the IFSCA has already laid out the regulatory framework for equity listings. So we are eagerly expecting a lot of equity listings to happen, both from Indian companies as well as from foreign companies. As an exchange, how are we different? What is the innovation? What is the reform which we have done? Typically, we have seen that in many markets which have evolved traditionally, there are silos. For example, even in US, I gave an example. SEC looks after the securities and the options market. CFTC looks after the futures and the commodities market. So there are two regulators. Here we have set up a unified regulator and we also set up a universal exchange. When I say universal exchange, we are become a single platform, a single universal platform. It is like instead of going to multiple stores to buy different things, you can come to one single platform or one single mall where everything is available, everything is netted across the board, and effectively we straddle all asset classes, be it equities, be it fixed income, be it currency, be it commodities, and even some of the financial engineer product like depository receipts. And I think we can keep on going because there are REITs, structures, there are investment trusts, units, funds, everything can be traded in a single platform. And broadly, the NSE's vision is that NSE International Exchange vision is to become a preferred financial gateway, preferred venue and a financial gateway for both inbound investments and outbound investments. So I'm making this very consciously because we feel that a lot of Indians now are becoming affluent. They are looking at also investing in the rest of the world. And they are looking at probably diversifying their asset portfolio. And to that extent, I think going forward, outbound investments from India is also going to be a big story. And as an international exchange, thanks to the innovation mindset at our regulator, through a regulatory sandbox, what we did is we actually got the top 120 companies from New York Stock Exchange and NASDAQ in a form of an unsponsored depository receipt. And today, every Indian can have an access to buy an Amazon share or a Google or a Apple or a Netflix or a Tesla or a Nvidia. So these are all possible, and effectively all this economic activity, all these intermediary activities now being captured through the GIFT International Financial Center. So these are just, I will say, these are all things which have already happened. And this is just 5-year-old exchange which has started doing it. I think we have a long road in terms of doing more things. And that is what actually brings us to Lanka also, to see how we can look at creating cross-border opportunities between both the countries. I think in any financial market, any investor, for him the most sensitive subject is tax. Right? We all want to pay zero tax, if possible. That is utopia. But honestly, we all also have a sense of responsibility to our country. So we know that we have to pay some tax, but it should be moderate. It should not be something very, very large. And I think GIFT International Financial Center has embodied this particular quality. As an OECD country, any jurisdiction which actually doesn't tax is considered to be a global tax haven, and in fact is punished, and today FATF norms and all of them actually don't look at it in a very positive way. Even investors, including large investors, funds, they also say they don't want to go into these kind of zones which are tax havens because it gives them bad reputation. So if you look at good investors, good kind of institutions, they want to come to a center where there is tax certainty, there is a low tax regime or a moderate tax regime which is acceptable based on the kind of market. And in some sense, at GIFT, we have tried to achieve this. So just to give you a quick sum, on the left-hand side, I've talked about tax benefits for every investor. So we don't have any transaction taxes. In India, we collect a lot of transaction taxes. That's how NSE actually collects it at the end of the month and gives to the government. Here, since we are primarily talking about offshore investors may be paying tax at their home jurisdiction. So we don't want to create an additional burden for them to pay also in the investment destination market. So what we have done is we have actually removed all these kind of friction taxes, whether it is a securities transaction tax or a commodities transaction tax, and also no capital gains. And this is something which we have done, and there are no stamp duties. And also for fixed income players, anyone which is a GIFT IFSCA entity, a regulated entity, if it wants to raise international capital on debt side, there is zero withholding tax. And Indian corporates, we also extended that if they actually come to the GIFT City and do a listing, there is a lower withholding tax regime which is applicable to them. So these are some of the incentives or the fiscal incentives that the government has created. And these are something which we have carefully studied all global centers. So effectively, we are almost benchmarked with Singapore as far as taxation is concerned. Secondly, any international center will definitely need regulated entities, intermediaries, which actually Pradeep showed in his slides, which are banks, which are stock exchanges, clearing corporations, stock brokers, investment bankers, advisors, all these fund management entities, all these advisors. So for them, the government has actually given them upfront a little bit of an incentive. It has rolled out a 10-year income tax holiday out of 15 years. But at the same time, as I said, we don't want to make it zero. So there is a minimum alternate tax of 9% which is applicable, which is a high single digit, but still a moderate kind of taxation. So anybody who wants to come and do business can do with these kind of stuff. And since Gujarat is the state in which GIFT City is there, the Gujarat government also gives certain incentives from its state's coffer, which also enables job creation, because in all countries the governments want job creation to happen. So they have actually rolled out some employment related benefits. So everybody has to pay some amount of their salary which goes into the deferred pension or a superannuation fund. So that contribution has to be matched by the employer. So the government of Gujarat, which is the state government, actually matches that contribution. So the employer's cost to pay that goes away. So that becomes another kind of a incentive. So this is something which I'm sure a lot of you, because you're all probably the corporate leaders and the bankers, if you're looking at it, these are some of the things which is what makes GIFT IFSC really attractive. Offshore participation, primarily anyone who invests in the country either does a direct investment, which is called a foreign direct investment, or they do a portfolio investment, which means they want to invest in the markets. So I am going to talk about the second part, which is the foreign portfolio investor regime. So India has actually been continuously liberalizing from 91 onwards, and I think we have done 3-4 reforms, and we have come to 2 categories of FPIs. One which are sovereigns and regulated entities in other markets, and second which are the unregulated entities. That's all 2 categories. In GIFT City, we wanted to make it even more easier. So there are roughly about 12,000 to 13,000 foreign portfolio investors registered in India. So first thing which we did is, we said we will grandfather all of them. So they don't have to do anything, they are welcome to GIFT City, no additional thing to be done. Second thing is, we know that there are probably hundreds of thousands of foreign investors who also may be looking at investing in the markets here. And we categorize them as eligible foreign investors. And these eligible foreign investors can just simply open an account with a bank, can simply open an account with a broker, simply open an account with a depository, and they can start doing business. They don't have to actually worry about taking local tax numbers or filing returns. None of this apply as far as global offshore participants is concerned. So effectively, this has promoted phenomenal ease of business, and effectively, it's a red carpet to international investors to come and invest in. Another concept which has happened. Yeah, this one. So I think I missed the last one, the remote trading participant. Again, this is something which is a very, very unique concept, which again, we requested our regulator, and the regulator was very proactive in giving us this kind of regulatory framework. Today, there are a lot of people who sit in different parts of the world, different centers, and definitely post-COVID, people don't want to now go and set up offices in different geographies because travel restrictions have come and so on and so forth. So nowadays, the biggest institutions call something called follow the sun model. So effectively, they want the same center, but they operate in 3 shifts, in 3 time zones, but effectively they can trade all the world markets. And in some sense, what we wanted to do was to capture this piece. And that's why we wanted a remote trading participant framework, which means large funds, large traders, large high frequency firms, all of these can sit in New York, Chicago, London, Amsterdam, Tel Aviv, Hong Kong, Singapore, Tokyo, Sydney, wherever they are, and still they can come and trade on our market. So we don't want them to come physically and shift out here, but we gave them almost equivalent status like a broker-dealer, but the caveat is they can only trade on the principal book or only for themselves. That is a proprietary trading. So this again is a very large kind of piece of legislation, which again is very unique from this perspective, because that means we are able to attract more and more participants to come to the IFSC. So I talked a little bit about how the Singapore market moved in. So these are some photographs of the first successful cross-border partnership, which is the NSE IX Singapore Exchange Connect. And what we did is we got Singapore Exchange to set up a special purpose vehicle company in the gift city, and they have become our trading member and clearing member. And we are given them some few privileges. So effectively, they can actually pool their own set of investors and bring the order flow into us. So this is just a beginning. This is just one of kind of a pilot which we talked about. And since this Connect went live, before that, the amount of trading which used to happen on Singapore on this product actually has doubled in less than 22 months. So that means when you actually pool people to come together and create a single liquidity pool, it actually 1 + 1 doesn't mean 2. 1 + 1 can actually become 11. And this is what the symbolism here is all reflecting. These are just some statistics in terms of the number, but interestingly, let me tell you, many people ask me this question: how do you compare in terms of size compared to the domestic market? So Nifty is the NSE 50 index, which is the benchmark, which normally all the international investors use and even domestic investors use. So there is a futures and options market by which people can actually play in the market, both in terms of having a long position or a short position. So in NSE International Exchange at this point of time, on the Nifty futures, the amount of trading which happens on the domestic market, that is in my parent NSE, compared to that, the NSE International Exchange volume is almost double the size. So this may sound a little startling, but that shows the amount of interest in Indian market and amount of interest amongst global participants in interest market, and why they want to come to an international center to access it. So earlier they were going to Singapore to do it. Now they are coming to India's own financial center to do it. And this is some numbers in terms of how our exchange volumes are exploding. So we have a CAGR growth rate of almost 88% over the last 5 years. More importantly, I think today's audience will be actually interested in this, because raising funds is something which all corporates, all bankers, everybody is interested in. And that is the basic function of any capital market. And I think what we are doing here is we are actually creating a nice framework where companies from India, companies from abroad, which could actually come and raise money in gift. And we are giving them access to the huge pool of Indian investors who can all invest into Gift City through a liberalized remittance framework, wherein each individual is allowed to remit $250,000 US. So if you have a family of 4 as a unit, it's about $1 million per family effectively. So, you know, India is home to almost, I think 1.4 billion people. I think even if you look at the top 10% of the population, which is like basically 14 to 15 million people, if they take out $1 million, the number could be mind-boggling. Numbers could run into almost hundreds of billion, if not trillions. So this is the potential in terms of why companies should come and look at our center. And at this point of time, we have been enabling a lot of international companies to also look at debt listing. Incidentally, one of the banks here is probably going to look at it, and we can bring in a lot of visibility because NSE as an exchange is well regarded. Our data flows into every news wire in the world, be it the Bloombergs or the ILCCI, Thomson Reuters, Refinitiv, whatever you call it, whichever agency, they will be picking up our feed. And more interestingly, we run a market for 21 hours. So idea is, if somebody wakes up in Japan, you should be able to trade on my market. Somebody before going to sleep in San Francisco should also be traded on the market. So effectively, we are saying we are catering to the entire global audience. So effectively, what we do is when we bring a company and we get them to on our platform, we are opening it to a pool of investors to the entire world. What specifically, which we have some ideas. We have friends here from my counterparts in Colombo Stock Exchange. Some of them have visited us last month. Some of them also visited us in NSE in Mumbai. So, in fact, we have been having some initial conversations in terms of how we can look at cooperation amongst ourselves, how we can collaborate. We have actually proposed a dual listing framework because India always wants to co-op people. We want to do it in a friendly way. We don't say take this road or take that road, it's a highway or no way. We actually always want to collaborate because that is sustainable. It has to be a win-win partnership, which is what we are striving for. Obviously, we will work out these parameters in terms of what we can do. But more importantly, my colleague Ethel, she heads our listings. You will be seeing more of us in Sri Lanka, and we'll also welcome you to come and visit us at Gift City, as well as in Mumbai, and look at our exchanges, look at our partners. And we have a very strong digital footprint. So our websites, our social media platforms are all pretty much pervasive. You can definitely look at it. So what we are looking at is Sri Lankan companies, whether it is for equity listing or debt listing, can actually look at a potential dual listing into the Gift City. We can actually create a dollar market for you. Because right now, everything which is traded, cleared and settled in NSE International Exchange is in US dollars. So this is going to actually enable Sri Lankan companies which are wider, which has bigger ambition to go global, or they are into exports, or they are into imports, that kind of stuff. Those kind of businesses can definitely raise capital from the Gift City and from the NSE International Exchange. Second is, we also think many Indian companies could also collaborate with Sri Lanka, be it in the hospitality sector, be it in some of the new renewable energy sectors, be it in infrastructure, many of these. So I think this kind of a cross-border partnership will help us to also become a bridge in terms of getting the best of Indian corporates to also look at investments into Sri Lanka. So these are something which we can definitely do as an exchange. And an exchange is always a very simple business. I call myself as a port. I'm a port for capital. Be it a seaport, be it an airport, be it a railway junction or a bus stop. Finally, our job is to bring capital from one place to the other, and it has to move from a guy who wants to make returns to a guy who wants to put it for productive usage. So effectively, we get investors and issuers together, and that's the job of the exchange. So this is again just some reflective list of companies which have raised money on us. I'm not going to dwell too much on that. And I think Pradeep did speak a lot about the ESG or the green bond market or the sustainability platform. So NSE IX has established an international sustainability exchange platform, or the ISX, and we are already seeing a lot of ESG companies coming in and listing their offerings. And this need not be just limited to bond markets or debt offerings. This can go to green REITs, this can go to green funds. So the possibilities are endless. And I did already mention that we also created an outbound access market. So there is also a possibility that investors who have dollar capital, which could be large family offices or high net worth individuals in Sri Lanka, they could also look at using the GIFT City for accessing international diverse assets to invest in. So these are again possibilities which are there. I already covered RTP. And I think the way forward for me is that we have just begun our journey. It's 5 years now. But I think in the next 10, 15 years, we'll become a pretty large force multiplier, and we'll become a global exchange, and that's what the vision is. And we'll definitely want to partner in progress with Sri Lanka. And Sri Lanka is always close to heart for India. And in some sense, NSE International Exchange will probably extend that. Thank you. So with that, probably I will just end my presentation. Thank you so much.
Thank you, sir. After this address, I'm sure the audience has a clear picture of the wide range of opportunities that can be leveraged at GIFT City. I guess we've all had enlightening presentations from our speakers, but it's a lot to take in. And therefore, ladies and gentlemen, may I please remind you all that we have put QR codes on each individual table. I request you all to scan them so you can download the presentations for, maybe referring to them later, and we look forward to hearing back from you thereafter. Our panel will be back for a short Q&A, but before that, with great gratitude, may I please welcome our chief guest, Honorable Dr. Harshana Surya Peruma, Deputy Minister of Finance and Planning, Government of Democratic Socialist Republic of Sri Lanka, for his address.
A very good evening to my dear friends, but more importantly, Ambassador, no stranger to the relationship that we have built as two nations, and your role in doing so, to getting many of us together in that journey. So once again, thank you very much for inviting me for this session. The financial markets that we are looking and that we are discussing today has a great role for the word integrity in it. This is why the endeavors such as the ratings that we discussed, and the agency presented a very good picture in terms of your capabilities and capacities that you have ventured outside. I suppose naturally it is the next thing to do for a giant like India. They've established themselves very well, growing globally in terms of advocating and establishing presence in terms of validating financials. It is an ecosystem. As a government, as businesses, it is very important. Instead of we telling what we do, an independent party coming and verifying it as to whether what we have told is the correct in terms of numbers, in terms of conduct. So it is very important for rating agencies to work very closely with the business enterprises, assigning ranks and credentials based on the past performance as well as the projections for the future. Same applies to a country as well, like Sri Lanka. It is no secret that we have gone through a tough time. Right throughout, we were assisted by India during those hard times with personal intervention from the ambassador that we know to support us in that journey. That is the past. We have come to a particular point in time. Sri Lanka is recovering. The fact is established. The political stability that we offer, the economic stability compared to the level that we were, provides a great potential for investors to look at Sri Lanka. Our entities offer wonderful multiples, the great potential for those entities to go to the next level. I suppose that's where the collaboration, the achievements of NSE that you shared, it offers the opportunity, both Sri Lankan entities as well as Indian corporates, to work together to understand the strengths of each other and to see how we can collaborate and get listings on each other's exchanges. I can see from the Sri Lankan exchange also, the team leaders are here, senior management. We have a story of our own to tell, but at the same time, there is convergence, there is ability to work together and collaborate to benefit from each other's strengths. One market might have gone ahead than us, than to Sri Lanka. That's where the opportunity to work together and to allow the benefits the markets have to offer to each other in terms of the investor pools, in terms of the entities pool, in terms of the diversity of products that they have to offer, multiple benefits and opportunities to explore. In this journey, in the Sri Lanka's context, the characteristics that we offer as a nation for investors. In one angle, the social dynamics. It is positioned in a place seated next to India with well-educated population, access to Sri Lankan markets, multiple overseas markets based on the FTA agreements and other bilateral agreements that we have. There are multiple advantages by investing in Sri Lanka and working with Sri Lanka. That is where the future, that's where the potential. This is why each others can benefit from each other's advantages and the strength that we have grown over a period of time. Sri Lanka was behind, Ambassador, as a nation because of multiple challenges that we had to go through. But our journey ahead will not be that difficult. We can learn from the lessons in terms of digitization that India has achieved. We can learn from the diversity that the markets are offering, the exchanges are offering in terms of what you shared with us a short while ago. So the journey will be easier for us to go ahead. The time will be shorter for Sri Lanka to catch up. That's why we believe, as the government, we are positioned and we are ready to facilitate to the endeavors that the private sector, businesses are working to achieve. Government is confident we will be able to take our nation to those milestones that our businesses are looking forward to. When getting there, we are not alone. There are global dynamics that plays a role, particularly to a country like Sri Lanka when we have thin margins. We are trying to recover, but we are positioned well in terms of our reserves compared to where we were 2 years before. We are positioned well in terms of interest rates compared to where we were 2 years before. Our exchange rates are very well within a range. It's behaving within a range much better than it was before 2 years, within the last 2 years. Similarly, many aspects we have shown the resilience that we have to offer as a country. That gives the opportunity for larger enterprises to work with Sri Lankan enterprises, invite Sri Lankan enterprises to consider listing overseas companies to come and get a secondary listing in Sri Lanka. I'm sure our platforms are ready and waiting. The regulator is ready and facilitating. We have a very dynamic regulator, robust regulator, experienced regulator, supported by our market infrastructure as well here. Even though smaller in scale, I'm sure our teams are dynamic enough to work together with a giant like the exchange, the Indian exchange, to showcase their capacities and abilities. I was fortunate sometimes back to visit your exchange a few years back and to understand firsthand and experience firsthand the capabilities that you offer. I suppose that is the journey. The crossroad that we are in is to work together and benefit from each other's abilities. Sri Lanka is showcasing its resilience in terms of recovery, just about to take off. Our markets are showing highest ever numbers in terms of index, the way how turnover is, that we are booking the turnover. And some of the milestones we are yet to achieve, some large FDIs or foreign inflows into the market, but I'm sure we will get there. It's not only the market is showing that country is ready. If you look at the budget that we have taken upon to achieve, from 4 trillion to 5 trillion in terms of revenue. I'm sure many CEOs are here with us today. If you want to increase your revenue by 25%, that's going to be a challenging task. But I'm sure auditors might have not qualified your financials, whereas the country's balance sheet in a challenging position, yet we are determined that we are going to go for that extra 25%. In order to facilitate that one, government is driving zero tolerance for corruption. Many of the revenues that did not see the treasury, instead it was diverted elsewhere, it's now coming into the treasury. We are making our system stronger. We are making our processes efficient. We are trying to support and create a facilitative environment so businesses can operate efficiently. Cost of doing business will be low in Sri Lanka because we have said no to corruption. Premiums that were paid previously are taken out. So it's a challenging journey, yet we are determined to achieve. That's the support that the government is extending with welcoming investors to consider Sri Lanka. I'm sure there is a delegation, there are businesses who are visiting Sri Lanka from India. The counterparts from the teams with whom we are working very closely, supported many of the times in the past to put our businesses in touch with the Indian businesses. This is a wonderful opportunity to strengthen those relationships and take our engagements to the next level. So I want to wish you all the very best on the endeavors that you're targeting, the strategies that you're trying to charter, to invite our entities to India. There are many Sri Lankan entities who have reached a particular level now to consider those listings. It will be for the strength, it will be for the benefit of the country. We don't want to consider as a deterrent when our entities are going to take a listing elsewhere. But we want to offer the reciprocity by inviting companies from India to consider obtaining a listing in the Colombo Stock Exchange as well. That's where the opportunity. I'm sure together we will be able to achieve more as two nations that we are working very closely with the support and facilitation. I'm sure the business community will continue that journey to achieve greater heights and to take Sri Lanka to a greater level. So once again, thank you very much for inviting for this session. I will wish all the very best for your discussions and subsequent engagements that we have planned for. Thank you very much.
Thank you so much, sir. We are deeply grateful to you for your time this evening and a wonderful address to this gathering. Thank you. Ladies and gentlemen, we now have an engaging, but please be rest assured, short and sweet Q&A session, which is lined up, which will feature into a little more details and you can ask questions. We have this panel being moderated by Mr. Thilan Vijayasinghe, Chairman and Managing Director, TWC Holdings. We also have with us on our panel Mr. Prince Pereira, Senior Vice President, Treasury, DFCC Bank, and our esteemed speakers, Mr. Pradeep Ramakrishnan, Mr. V. Balasubramaniam, Ms. Revati Kasture, who spoke a little while earlier. May I please request you all to join us on stage for a Q&A session and a panel?
Can we start? Good evening, everyone. As mentioned, we will be short and sweet, and most of the time would be spent getting your questions. But for me to put this particular discussion in context, it will not be a moderated session, but primarily a Q&A session. So on my left are fantastic capital market regulators, facilitators, rating agency, and of course, Mr. Prince Pera from DFCC is here because he has used the services of Gift City as a practitioner of having made certain issuances within Gift City. And I myself has had the pleasure of being a part of an IPO in the National Stock Exchange in December last year, which for the first time included Sri Lankan tourism assets within a South Asia setting where we raised $200 million via a Blackstone-backed company, which is now capitalized at $2 billion. So let me set the stage by stating that post-2022, Sri Lanka has introduced additional hurdles, shall I say, in terms of raising capital overseas, though I must admit that these hurdles would very soon be overcome by virtue of the available infrastructure within the Gift City. Now, prior to 2022, Sri Lankan corporates could convert LKR by getting exchange control approval to procure capital assets overseas, capital transfers overseas. But subsequent to the currency crisis, subsequent to the crisis in 2022, at the moment, capital conversions via LKR is not permitted. So therefore, Sri Lankan corporates who are looking at raising offshore equity or offshore debt for international acquisitions would have to either borrow them from domestic bank DBUs or FCBUs or from DFIs such as IFSCA when it comes to debt issuances. And if it comes to equity, there is again a process that the funds required for equity would have to be raised via offshore sources. And at this point in time, it's primarily DFIs such as IFC. Now, what Gift City provides is an additional source of raising such offshore equity, which at the present moment has to go through two regulatory hurdles. First, the approval of the central bank and the monetary board, and such approvals would then be referred to the finance ministry, where the personal approval of the Honorable Finance Minister would be required. So that's really the policy background in terms of what's possible, but I must point out that the government is actively encouraging the raising of offshore debt and equity for cross-border transactions. So within that context, I just wanted to pose a question to you, Pradeep. You did mention about taxation and the fact that there is a minimum taxation, global taxation of 9%. So does that mean that the issuer has the option of enjoying the tax exemption that you give or paying the 9% global tax?
No, I think probably, so there are two things here. Now, when you're going to raise bonds in the IFSC, so what is available to you is, for example, if you're doing it in India, then the withholding tax is 20%. Whereas what we offer in the IFSC is a withholding tax of 9%. So that is the advantage in case you raise money in the IFSC. This was what I think I was trying to say. I think Bala also had the same thing on the slide. So
it's exempt from income tax.
So income tax is something which you will have to pay in your country.
Okay,
so
it's
now there are
not
two
global
things
here.
here. Let me also clarify. For raising money in the IFSC, you need not be present in the IFSC. So you can raise from wherever you are. You can be in Sri Lanka and you can raise money in the IFSC. But the withholding tax for that amount raised will be 9%. Now, so there is no income tax angle when it comes to this as far as India is concerned, the IFSC is concerned.
Okay, thank you. Prince, if I may come to you, you've just obtained a dual listing of the 2.5 billion rupee green bond that you listed on the Colombo Stock Exchange. And then you've also participated in a Gift City Standard Chartered Bank syndication where you were able to invest your offshore, DFCC Bank's offshore money at SOFR plus 3.5% if I'm not mistaken. Can you explain to the audience the process and the facilitation that you received by the regulators?
Yeah, thank you very much. I think post-COVID that actually we see the banking sector in Sri Lanka also having some excess dollars, and sometimes we don't see that much of opportunities also here in Sri Lanka. So this is a good opportunity to make use of those funding, especially the excess liquidity. So we saw opportunities in India. There are certain microfinance companies, non-bank financial institutions are also very keen to borrow from overseas. So we have worked with a couple of Indian banks and joined syndications, not only DFCC, even other banks also joined a couple of syndications. So this is a very good opportunity because we routed those funds through Gift City. There is some tax advantages, especially withholding tax. So our message to the local companies who are planning to have their business expansion in India, we are very happy to support those businesses, and also the Indian companies, those who are borrowing from the international markets in foreign currency terms. All banks collectively, including the DFCC, will be very happy to support that. During the last 3 months or 6 months, we have done a substantial number of transactions in India, and we are planning to expand those activities in India because we see a good potential for Sri Lankan corporates operating in India as well as the Indian companies in India. So we are making use of these opportunities. With regard to the green bond issuance, now that we have listed our first green bond in Sri Lanka, we have had another listing in Luxembourg, and we have raised funds in Luxembourg. Probably the post-COVID, this is one of the first instance where Sri Lankan institution raised funds from overseas. Even given the current economic conditions and the low rating, we managed to get funding from the impact funds. There's a good market for all corporates as well as for the banks to raise funds. So Gift City is also an opportunity what we see. So this is why next Monday we have a dual listing in Gift City. So basically we are complying with the Gift City regulations. So this will be a good story for all banks as well as the corporates in Sri Lanka to raise both debt and equity. That will be very supportive for economic growth, because one area is banks in Sri Lanka will find that with the credit expansion going forward, raising capital is very important. So this will be a good opportunity which we are going to explore going forward. Thank you.
Thank you. May I pose this question to you, Bala? I've noticed that the issuances in terms of interest rates has ranged from about 4.5% to 9%. Primarily by Indian issuers. And I've also noticed that your transaction costs are also about 1/10, if not 1/20th, compared to Singapore and London. Can you just elaborate in terms of minimum issue sizes and the aspect of transaction costs, whether it will remain as low as it is, and give some indication on that?
So I will answer this question in two parts. First is, India always takes pride in actually providing the most efficient and at the lowest cost any possible service. And I think at NSE, one of the things which we do is a listing on NSE, traditionally in India, has been 1/100th of the price of listing in a New York Stock Exchange. So this is just to give you an idea in terms of how cheap our services are. And I think the same philosophy we want to carry at the NSE IX. There are the first world markets normally charge a very large, huge premium for the service which they do. We want to make sure that we can give cost-efficient service, but at the same time, we want to give, if not the same quality, some better quality in terms of service to the issuers and the investors. So I think that is something which is what makes India click, and that is what will make GIFT IFSC also click, and that is something which we are very steadfast about. Secondly, in terms of the interest rates are something which are market determined. And these are also determined also by credit rating and other factors in terms of how investors view the risk profile of a company. Again, depending upon different periods of the market where interest rates change globally, because most of these are set by central banks. So there are always windows of opportunity where there is a lead lag effect for interest rate in, say, a global currency or a dollar market versus the local currency, because the two central banks in these two countries may actually have a lead lag effect. And these are very good times where issuers can, which are the smartest, I will call the investors, they can take advantage of this difference and they can figure out where they can raise money. Whether to raise money in the local market at the local interest rate or whether to raise money in the global market at the global interest rate. So that is what will work as a factor.
Thank you. Revati, may I come to you? So the elephant in the room at the moment is Sri Lanka's own sovereign credit rating, where we have a CCC and some at default rates. So my question to you, obviously Sri Lanka is on the up. I think once we restructure the Sri Lankan Airlines sovereign bond, certainly there will be a credit rating jump. Now, when you carry out credit ratings, do you carry it out in an unsolicited manner, or is it that the government and the finance ministry has to invite a company such as CareEdge to carry out a credit rating for the sovereign? Because I see that as a sine qua non for our corporates to make issuances in GIFT City.
So, thank you for the question. Government or sovereign ratings can be both solicited as well as unsolicited. The difference between these two is unsolicited would rely only on publicly available data, and there will be no interaction with the governments. However, if it is on a solicited basis, then rating is all about what is going to happen in future. A past can be an indication of the trajectory, but to an extent. What is going to happen in the future is more important in terms of ability and willingness to pay. And that's why the publicly available data will give you only as much vision in terms of what's going to happen in future with respect to the government's own policies and the policies of the central bank in terms of taking the country ahead. So, solicited rating is always close to the actual rating than an unsolicited rating would be.
So essentially, the Ministry of Finance would have to invite you to provide a country rating. My final question, I did not hear anything about dispute resolution. Now, within the GIFT City, would you have an international arbitration center or your own court system? Because in India, like Sri Lanka, is famous for protracted litigation.
So, Thiran, we are working on it. We should be having an arbitration thing very shortly. So presently, the entities are free to choose their arbitration locations. We have seen some of them have chosen Singapore. Like for example, I've noted that in a few private placement documents that I've gone through. So we at India have a local arbitration conciliation act, but that of course we'll have to sort of make changes to sort of suit this place. We are on the job. We should be having it very soon, and we recognize that it's an important part, an integral part of financial center.
And finally, you mentioned about how the IFSCA has entered into partnerships with the Singapore Exchange, as well as, I believe, the Mauritius Financial Services Commission in terms of cooperation agreement.
So we have MOUs with a lot of countries, and these MOUs are largely on the for the purpose of sharing information. Right. So particularly when it comes to combating financial crime and all that, we are a member of the IFSCA, International Organization of Securities Commissions. And one of the things of becoming a member of the IFSCA requires you to ensure that you share information as and when it is needed. The advantage of having separate MOUs gives a small fillip rather to a fund or something to sort of market. I wouldn't use the word passporting. Passporting would entail something completely
Sorry,
different.
my question was leading to the potential collaboration with the Colombo Stock Exchange. The chairman is here, and so is the DG. Because the CSC has yet to issue a dollar bond, but I believe they are working on it. Maybe even the chairman can elaborate on that. Yeah. But just wanted to see whether that is something that you would look at entering into some sort of a MOU to see how collaborations can happen, as the minister pointed out, on dual listings.
So from the point of view of entering into an agreement with the Colombo Stock Exchange, in fact, we are a regulator, we will enter into an agreement, an MOU with your SEC, the SEC of Sri Lanka. That is how we will enter into you. But I think Bala can throw light on the thing with Colombo Stock Exchange.
I think I already covered it in my slides. As I said, we are open to more partnerships. And definitely we want to partner with Colombo Stock Exchange because we think it's a good way for cross-border flows to come. And I always believe that capital market cross-border flows will grow based on the growth of the trade. So if India and Sri Lanka's trade starts growing, the capital market flows will automatically follow as a consequence. And that is why I think it's high time that we actually start cooperating on these areas.
Thank you. So on that note, I'd like to open the questions to the audience. Please keep it brief, limit it to questions and not so much comments. There's a microphone roaming, and can you please raise your hands to pose the questions to the panel? Anyone? No? Yeah, so that's fine. I think we've spent quite a bit of time, but at the same time, I'd like to thank all the members of the panel and have a good evening and kindly interact with everyone who's present here on the dais. Thank you very much.
May I now request Mr. Akash Jain, Director, CareEdge Ratings, for a vote of thanks, please. Requesting the panelists to please continue being on the stage. We have to give a moment.
All right. Thank you. Good evening, distinguished guests, partners, and friends. On behalf of CareEdge Global, it is my privilege to extend heartfelt vote of thanks as we conclude this insightful edition of the dialogue. This year's theme, Credit and Capital, Building Trust Through Ratings and Regulations, has guided us through evening of meaningful conversations. In today's interconnected financial world, trust is just not a value, it is a currency. And through transparent ratings and sound regulatory frameworks, we can build the confidence that fuels the sustainable capital flows and economic resilience. On a personal note, during my visit to Colombo a few months ago, I had an opportunity to meet one of the local entrepreneurs. Over the quiet evening in Golface, as we spoke about the challenges and opportunity in this region, he said something that stayed with me. In our part of the world, trust is built slowly, but once earned, it becomes the strongest bond in the business. That sentiment beautifully echoes the spirit of today's dialogue, building enduring trust through credibility, clarity, and collaboration. Ladies and gentlemen, first and foremost, a special thank you to the Indian High Commission in Colombo, Sri Santosh Jha sir, Madam Devika Lalji, Sri Anandji, and the entire team. Big thank you for the unwavering support extended for bringing the dialogue to Sri Lanka. We are especially honored by the presence of Honorable Deputy Minister of Finance, sir. Thank you for your gracious presence and thoughtful insights that have added immense value to today's dialogue. Your commitment to fostering regional financial cooperation and regulatory clarity is truly inspiring. And we thank you sincerely for joining us. Also would like to thank Indo-Lanka Chamber of Commerce and Industry, TWC, and the Indian CEO Forum for your support that has helped us bridge and bring together two vibrant economies in meaningful dialogue. To our speakers, panelists, and the moderators, thank you for your insights and candor. You have helped us navigate complex issues with clarity and purpose. To our participants and delegates, your engagement has been heartbeat of this event. Thank you for your time, your ideas, and the trust. We are deeply grateful to our co-organizers, IFSCA and NSE IX, for their partnership and shared commitment to this vision. And to the teams behind the scenes, from logistics to media and technical support, your dedication has helped this event seamless and impactful. As at CareEdge, we remain committed to fostering platforms like dialogue, where ideas are exchanged, partnerships are born, trust is built. Thank you once again for being part of this journey. We look forward to continuing conversation and welcoming you to future editions. Have a wonderful evening. Bohoma Stuti. Dhanyavad. Thank you. Namaste.
Thank you, Akashji. May I now request His Excellency Shri Santosh Jha to please join us on stage. We would like to present a joint memento, Pradeep ji, Bala sir, Revati ma'am, to Minister. Sir, could you please join us? We would like to express our gratitude with a small memento. I now request all the other collaborators to also join us for a group photo. So we are going to bother you for 1 minute more to... Can we request the other collaborators also with us on this program to join us for a group photo? If they're around. Thank you for being a wonderful audience. Dinner is waiting.